Well, guys, obviously we're coming out of an era of unprecedented demand on the industrial side, where coming out of COVID, things were out of whack. There was, lack of supply. Landlords were pushing rates, and there was just tenants had a really hard time. We're starting to come out of that. Things are starting to change a little bit, but what are you guys seeing out there with your clients?
We have had some recent success with a couple different groups of ours, clients that we represent in the Atlanta market, looking for their own space to buy, find them a building, help them get the best price for that building. And it's actually been encouraging to see there has been some more supply come on the market that they could go buy.
Yeah, so one of the important things that we track is construction starts for new warehouses. And a few years ago, it was through the roof. I mean, there was 50 million square feet under construction in Atlanta and many other key markets around the country. That pipeline has basically dried up, and some of that has to do with demand, diminishing a little bit, but maybe also the capital markets, the debt side of things too.
Yeah.
We're also in a place in Atlanta where we really don't have many good sites left. So that'll be interesting to see what happens. Really the only sites we have left are becoming tertiary markets really, really far out. And a lot of these developers, in order to make sense of the deal, they're having to build to scale. So they're building big buildings, which that demand has pulled back. The bread and butter tenants under 100,000 square feet, more, close in locations, last mile locations, we're going to hit, or we are hitting a cycle now where we're having to tear buildings down, and that will be the next one. So we have been the low-cost provider. Atlanta's been a low-cost provider to Southeast for so long, but we feel like rents are going to continue to run as we start to have some of the natural impediment constraints that some of these other markets throughout the country have.
Yeah, and the costs to do it all, the construction costs have gone up. I mean, I think some of these developers are less likely to go speculative on a building now. They're going to want to have a tenant to really secure some of that cost. And so seeing some developers might be even a little shy to go buy dirt or break ground on dirt unless they know they're going to have someone to come fill that, to try and avoid some of this vacancy from some of those really big buildings that got built and have some vacancy in them.
Sure. So, but it's still a dynamic market. It's we're in a little bit of a plateau right now, but we think it's going to remain strong for years to come. What's going on Savannah Port, it's attracting some of the biggest and greatest tenants throughout our country, so throughout the world.
Yeah, and a lot of those folks coming from very high cost markets, LA, New Jersey, and they're all their margins are getting compressed just like everyone else. And so they're evaluating, working with several folks now that are considering coming to Georgia and operating out of the Savannah port, and maybe not New Jersey any longer, or at least some kind of port diversification strategy, and try to take advantage of what we enjoy as a lower cost market compared to many others.
I think we're able to really help those tenants a lot with our knowledge of what the Southeast has to offer, with our knowledge of the cost and then the concessions we can get as some of these landlords are really desiring occupancy. And so for these tenants that are looking to come to Georgia, a pro-business state, like I think we have a great piece of leverage to be able to help them in negotiations with their landlord to get the best deal. I think tenants are in a good spot.
Right.
I think back to your point on the land in the Atlanta market, even the cost of land, we've seen the cost of dirt in the suburban Atlanta, outskirts of Atlanta market, kind of go pretty high. And so, I mean, I think there's a note and something to be said about if you own, even industrial zone land that is just a gravel yard, it may have more value than you think it does. And so I think some of these owners that bought their building, whether it was 08 or 09 or whether it was 2011, that time, they have a pretty low basis and their business might not be operating on it all, or could operate, or maybe it's even sunsetting. I think that those owners are in a great place of leverage as well to go take their property to the market. And I think we've seen that with a couple of our clients at crazy low basis in their property and are able to really profit pretty well off of what the market has done for that property.
That's right. Yeah, so I think the next 12 to 18 months probably creates a pretty good opportunity for tenants that are either have a lease expiring or they're contemplating, going forward with a project in the near term. this softness right now, particularly tenants that are 200,000 feet or more, you're going to have a ton of leverage. And so, our ability to provide site selection, help you labor analytics and transportation, metrics. I do think there's a near-term window where they can take advantage of some of the softness that's happening right now.
Certainly feels like it, yeah.